Hello, hello, hello. How's everybody doing? Hope you survived the first full trading day of January. We got Bob here in a second. It seems so weird to have Bob on. It's like we just started the week and Bob's already here. All right, George, welcome back to the experiment. What's the experiment? Welcome back to the market traders. There's no experiment going on, George. Patrick's already looking for Friday. I'm with you, Patrick. Another short week. Let's just skip to Friday. AP's World. Good afternoon. Hey, Waka Waka. Hey, Daniel. Yeah, Tesla does have a potential double bottom. Hey, Josh. Coco saying it's a great way to start 2023 and wants to know if Bob's still long. Second part was what I added in. You think it's front running data for tomorrow? Well, we'll take a look at what's coming out with tomorrow. And no, Apple did not help either. I'm with Patrick. I'm over this market already. Oh boy. If this is capitulation, oh boy. And the chopping continues. We're still in the range. We're still within the range. Hey, Jacob. Let's see. Connor. Yeah, Meta was up today. Uh, I'm still in the 15-minute trigger double bottom in the micro ES with fingers crossed we don't gap down. Good evening, Anissa. Let's see. So, all right, Chris. Chris still looking. Hold on. Got to bring Bob back in. Still looking for 360 or 396 on the S&P. Come on. Hello, Sashi. All right. It's the only way I could see the difference between Chris and Sashi was the C versus the S. Sometimes when I see back-to-back colors, I think it's the same person. But it wasn't. Today was an outside day reversal. We'll take a look at that too. Tomorrow, we got the mortgage stuff coming out well before the U.S. Open, but right before his Red Book. After the Open, we got ISM Manufacturing PMI. We got the JOLTS job openings. And then we have tomorrow afternoon at 1 p.m. Central, we have the FOMC minutes. Today, we had the S&P Global Manufacturing PMI coming in exactly at forecast, down from previous. Construction spending was surprisingly month over month did jump a bit. Market map, you see Apple down 374 basis points, Tesla down 12.24%. Google, Meta, Amazon were the performance, the upside, and Oracle up there. Nvidia's chips took it in the shorts today. Oil and energy stocks got crushed. Oil confirming the double top pattern, but not triggering yet with the daily close unless we get a really weird closing print. So, sectors. Comm services was the strongest thing, which that gives me a little uh-oh moment. But energy, weakest, because comm service has a lot of junk in it still. Fed watch, roughly 70% for the 25 basis point. Fear and greed still in fear mode. Fear mode. And as Rich said, it was an outside day compared to Fridays. Outside day, higher high and lower low. We're still within the huge consolidation range. Hey, Charles. Let's see. Let's bring on Bob. Let's just bring on Bob. It's what you're all here for. Bob, you are on. Are you long, Bob?
Still long.
Are you still
Get that
long?
out of the way. Yeah, still long.
So you've taken the fourth quarter position and you're carrying it into the first quarter.
Yeah,
Am I
but not
right?
for long.
Huh?
Um, Likely, if you ask me on Tuesday, you won't hear me being long.
Tuesday, that would be next Tuesday? Because it's Tuesday already.
Yeah, I'm sorry, next Monday. Next Monday, a week from today minus 1 day. I don't know, man. Our connection is terrible.
Is our
Um,
connection
I
terrible?
got booted out. I joined back in. Well,
Huh.
I joined back in twice. So yeah. So another double-digit down day for Tesla. Um, yeah. So likely I will be done with this position by Monday. The non-farm payrolls. I want to wait for that to see what effect it has. I've got my break-even stop in place. Um, why does Coco think I was wrong on a profitable position? I'm curious.
You're still wrong, not long.
I
What?
really want an explanation for that. Why would I be wrong on a profitable position? What part of the position? As a matter of fact, the position did absolutely everything I said it would do, which was only what was it, Coco? Fourth quarter would be higher than the close of the third quarter, which is exactly what happened. Should we measure that out, Mike?
Fourth quarter up versus the third quarter?
Let's see.
Well, oh boy.
Somewhere around 5%, right? A little bit more than that.
All right. Yeah, you can do the math.
Yeah.
I'm not
So
doing it. So,
I'm just taking the tool on trading. I'm not even doing math. I just put up a monthly chart and measured the close of the month of September to the open of today,
well, there
or
you
I guess
go.
to the close of December. So
Well, as long as you're
no big
still
deal.
long, the
Yeah.
world.
So up a little over. Yeah, up a little over 6%. I've said that I would get out some point early in the first quarter, and I think that's going to be Monday. So
Coco
yeah,
says you should
that's it.
just take your profits,
In terms of
Bob.
today, that's what I just fucking said, Coco. Jesus, you're a moron. Anyway, um, from the perspective of what I thought of today, I didn't think much of it, to be honest. The biggest takeaway to me was we were down 2.37% from the high to the low, right? We were up over 1% in the ES and we ended up finishing down, I don't know, what, 40 basis points, 48 basis points, something like that. When you measure the drop from the high today to the low today was over 2.33% lower. I think this is happening too quickly, quite frankly. I think it's happening too early. I don't think this is going to last. I actually think we're going to rally on Friday. I think the jobs numbers will be okay. I don't have anything to back that up. It's just my view of the market. I've said before, I don't like that I'm now in the majority with the sell off this year that basically everybody thinks is going to happen. So I'm looking for something. I don't have it on a chart and I don't have it in fundamental analysis. Looking for something to spike the market higher in a very aggressive way in order for me to get short again. So not short, long, be out a week from yesterday, probably.
Well, you got cycles at the bottom, and look in the bottom, Bob, on the weekly.
And I'm frozen.
Oh, boy. Hold on. How's my stream without Bob? Because we're having some. I might have to switch, but if I switch, then we lose the whole stream, and then I have to restart it. So still a whole lot of nowhere. Still not below the key breakdown level. Still not above the key breakout level. Still within the post 15th trading range. The post 15th trading range is still intact. So, not much there. Let me bring Bob's back. There's Bob.
I'm back. I don't know what the hell's wrong with our connection. Coco says, chill, Bob. It's not bad to be wrong. That's really from an expert about being wrong. So I guess Coco's life would be awful if he got upset about being wrong because he's wrong constantly. Coco has now gone into the realm of Tom Tom where he's just a troll. So this will be my last response to Coco directly anyway. Because
All right.
when you say stupid shit, we don't have time for this.
So,
All right, what else we got?
So you think non-farm payrolls is going to, which is Friday, is going to come out fine. You're watching for some catalyst to spike the market higher.
Yeah, I want less of a convinced crowd that there's a recession and that we're going lower. Because when I started making this call, I didn't, there were a lot of people, Jim Iorio was one of them, saying that the lows were in. Now, obviously, the October lows were the lows for 2022. I'm frozen again.
You're not frozen.
Uh,
No. Huh. I don't know what is going on. So, let's see. I was Sterling. You're along the mini. You're along the little pattern here. You're along the little pattern with the. I was looking at this with the conservative targets, which was stop reduction is hit. Stop reduction is hit nicely, and that's. I mean, it's a nicely formed double triggered pullback move to get in it. So there we go. Let's see what else. So that's the little thing. But overall, here's my macro. We're still in this thing. My God. 3807, first warning sign for a breakdown, especially on a closing basis. 3788 is the breakdown area. And the key close then is 3755 to get bearish. To get bullish, boy, I sound like a broken record, about 39.35 breakout level. Other than that, it would just be short-term patterns, exactly like something like Sterling was trading, which is a short-term double, because we came back down to a key prior support level, tried to dip below it a couple times, forming a double bottom, running up, hitting the first stop reduction. Overall, cycles look to be topping out again on the daily, but we got weekly at the bottom, so we could get another, as long as this holds. Once those weekly cycles turn up, it could get interesting for upside. Bob was looking at, let me take off his stuff for now. It was Bob's looking for the pop. I'd love the pop higher. I'd love the pop higher, even beyond the 200. I'd love us to get out the 200, and then get a close about 40.33 and maybe retest this 41.31 to 41.80 area and shake out a lot of the bears and then do a nice rollover play. So, all right, Bob's back. Sorry for the technical difficulties. I'm going to have to figure out what's going on. There we go. Caught Bob mid drink.
I think it's on my end, Mike. I don't think it's on your end. I haven't reset the router in a while, so I'm going to do that next. But I just rebooted. Hopefully, this one lasts. If it doesn't, I give up, and I'll see you Thursday.
Well, at least you'll be back on Thursday. It's a way to start off 2023. Is that the way the year's going to go until we get a rip your face off rally? So
I think so. Sure. I don't, I've got to do a Bloomberg spot tomorrow, and they asked me for my notes on the year. I don't have a lot of strong conviction at all at this point. It's too early in the year for me. I probably should have said no to the invite to do the show. Wake up tomorrow. I'm going to tell them. I mean, from my perspective, again, with a field of people calling for a recession and a drop is too big now. I don't think it stops the recession by any stretch. As a matter of fact, it's going to be more self-fulfilling than anything. But it has a chance of stopping the drop, because you know how it is, Mike. All we need is a little bit of good news, and all of a sudden everybody that's starting to quietly get short is just freaking, they get their face ripped off. And they're piling on and buying their shorts back. And, and that's probably another good time to get short, because I still think we're looking at a situation where earnings estimates are way too high, given the backdrop. Yeah, we lost it.
Yeah, earnings estimates are
I give
way
up.
too.
I don't know if you guys can hear me. Mike, I give up. I'm going to text you the same thing. I'll see you guys Thursday.
All right. Well, you'll have to come back to on Thursday, Charles, because Bob gave up. I don't think it's on my end. I just double checked everything, but sorry about that. So, until my long term thing or my medium term thing is until we get out of this trading range, it's just the tactical trading. The NASDAQ, I mean, with the S&P, pulled back but still in the range, the NASDAQ gapping into the daily rotation zone but pulling back, not breaking key technical levels yet. I mean, this is actually, if you look at it, we didn't break any key technical levels to the downside. So if it can't get much follow through, then I am more preparing for that upside breakout. Upside breakout unless we get that close below about 10.7 in the NASDAQ. So, but we're still a fair ways off on that. I will be watching this two top area. See these two tops corresponding with the bottom from December 21st, and the NASDAQ, I'm watching the top from the 27th and the top from the 3rd. Roughly coming in just above 11,182. Why we start getting above there, I will be looking for a breakout play for a little quick pop higher. Cycle's still pointing up, but other than that, there. I mean, look, this was just a volatile, choppy, horrible mess. We got some downside holding the key levels, just a little bounce there. There was no super strong pattern here. This was not a strong bottoming pattern like you had in the S&P. So that's just ugh. Again, overall, not planning on getting chopped in here. The Dow, did this technically, I didn't look at the Dow, 32,989, 32, yes. The Dow also a technical outside day with a close below the 30th. But remember, I said this is historically one of the most volatile trading days of the year and did not disappoint with just volatility. But did we do any technical damage? No. That's what's interesting. So we got the volatility, but we didn't do any major technical damage. And we didn't do anything to the upside to do a breakout play yet. So nothing's changed. My Dow stance hasn't changed. The Russell hasn't changed. We're still in consolidation. The DAX, I'm watching for some follow through to the upside. As long as we hold above the 50, this 13,940 area, I'm watching for a retest of these highs at least. So nothing with there. The notes I'm watching to see how we react with after the first cross the rotation zone. We pulled back to 56.2.5. Did not get a strong bottoming formation there. Just a little pop back to the rotation zone. So there's nothing great set up there. The dollar index barely closing below the rotation zone and closing below these key closing peaks right here. I'm still watching for some follow through. We do have a potential double top, not yet a triple. That's the only thing I'm keeping an eye on going through tomorrow. So we get at least a 1 hour close below 103.82. We've triggered a double, and my targets are then for a retest of these lows that have held 1, 2, 3, and including today, 4 times. We start getting the breakdown of the dollar, though. You could see we get a pretty strong bid in the financial markets. The VIX, pretty decent reversal after a run up today. But if we start getting this gap fill with some upside momentum, we'll start watching for those long setups. Crude, outside bar, confirming the double top, but not triggering it. This can also be traded on a 4-hour basis. So it's confirmed but not triggered. So that's what I am watching for with crude right now, which could potentially take it back to 72.40. I just got to flip these around. So, and then it could eventually take it back to 71.50. Natty gas continues its sell-off with the warmer weather hitting the next harmonic. So if the sell-off continues, there's not much until 358. Gold, daily cycle solidly back at the top. Could not get a close below this 1850 area. Still watching for a rollover play. That rollover play is not for a big bearish setup. It's to roll over and then see the pullback for establishing new longs. It is getting long in the tooth on the weekly. Cycles pinned to the top in overbought condition. Daily getting to overbought with cycles at the top, and this is all it's been able to eke out. So I'm watching for a rollover play in that, and that would be a short-term rollover play. Copper still not able to get through to 200, but no technical damage done there. So, what else? We still have the yen. As I've talked about, the trade of the year in my book will be one with the yen, but I'm watching for a quick pop back to the daily rotation zone for potential short setup. The euro did trigger the double, so I'm watching for this to reconnect with about 104.18 and the 50-day. So that did trigger. And then we could, if we get some momentum, a follow through to retest the 200. The pound, nothing much going on here. The only thing I've talked about for, it's been a couple of weeks, was reconnecting with the 50, which we did. And now there's just not a great setup. If we do break some of this key support, the next major support isn't back down to 116. So I'm going to be keeping an eye closely on the dollar and that double top on the euro because that could put some downward pressure on the pound. Bitcoin, nothing. So we don't need to look at it. Tesla. For you Tesla bulls, we still have a potential double bottom in play. We gapped this morning and never even attempted a gap fill. Filled the gap back from Wednesday the 28th to Thursday. And you can see here, you have it would need a daily or a 4-hour close above 124.47. 124.47. You need a closing price above there. Do you have a better bottoming position yet? No, you do not. It hasn't even broken this area. You can see here it's just retested that, so it's retested the support becoming resistance. If this does roll over again, my next major target is back to 100, which would easily invalidate that double. So, and where would that double take it back to? See, there's so many people looking for Tesla bottoms. That's the only thing. That double doesn't even take it back to the weekly rotation zone, and on the daily, it takes us within the daily rotation zone. So that's all you get out of it. Personally, I would not buy it without the trigger unless it gets a shorter term pattern, and there is no shorter term pattern just yet. So we'll have to check in tomorrow. It's not blindly buying it. Apple, by the way, this is not a potential double bottom in Apple. These bottoms are too far separated. The next target is 122 on Apple. If Apple does rally, you're going into, even on a stronger Apple rally, this is what's interesting with Apple. Even on a stronger rally back to like 135 area, it's just returning to a key breakdown area with the weekly rotation zone declining. Now, I would not be surprised if we start getting a market rally come back on Apple, getting oversold on the weekly and at cycle bottoms. So I will be watching for a rally, but that rally would be for another longer term short setup. And there is no strong bullish pattern just yet. It's still below the lows formed last Wednesday. It broke below those, you see, and it's just going to retest them from the underside. It has to at least get above there before looking for anything. Blackstone says it secured $4 billion investment from the University of California for unlisted private real estate income trust. What is my PE market cap on Tesla? What's my PE? Well, it's not my PE. It's just the PE as listed on this platform. It's 38, and the market cap is 341 billion. So, now remember, PE, for all those people who think this is ridiculously low PE for Tesla, you can get earnings compression coming in over the next year, which then naturally raises the PE even if Tesla stays the same. What's my PE target? Oh, my PE target's sub 20, easy. Easy. So, what else did I miss? Can you explain perhaps in another session your thoughts on US dollar JPY and why it's your main potential trade of 2023? I can go into it now. Because it had the massive run up. They've repegged higher. They'll probably have to be repegging higher with their bond buying program again. It triggered a key weekly reversal pattern. So I got probabilities. I have a slow shift in their policy. I mean, the stop on this thing too. I mean, the stop to invalidate this pattern, that's why I'm patient, is back at 145.50 area. It has to break. Look, it's already broken below major key support. So we have a fundamental shift and we have a technical pattern triggered, which could easily see us return to the area of the 200 week and the prior major breakout area. This was a major breakout area. See how long it based here? Look at this base from October 21 through March. Then we broke out, started the power move higher. Easily, longer term, we could reverse this move. So, that's why it's my play of the year. Because we have a great technical setup. So does that mean you could theoretically just stay short all the time, or you could do it more tactfully, rallies back, especially even back to 133.50. Looking for sell setups, rollover plays. You have some decent clear paths in here. Weekly clear path. We're trading against the key key resistance becoming support. Once we break through that again, you got a decent move down to 127. Then below 127, you have another massive clear path move. You got a little stopping point in here to keep an eye on. But you got a massive clear path move all the way back down here. Does that mean it just falls straight out of bed? No. But once currencies can get a trend going, sometimes it gets to very they start just moving, and then it's hard to fight the momentum. So that's why it's my one of the key trades of the year for me. Uh, yeah, I saw that right before I started. They're gonna get 25,000 frequent flyer points. So yeah, you can fly Southwest Airlines some more. You had such a good experience with this. You can use your frequent flyer miles and book more trips with us. So yeah, Microsoft was hardly hit today. Microsoft, as long as Microsoft doesn't get a key close below 232.36, watching for some kind of bullish setup. There's just not a fantastic one yet. You know, so when are their earnings coming out? When are they? About the 24th. So I am, yep, I am watching. This was, I mean, we had this little mini double right here, which triggered, still not invalidated. I should have put this up there on the 4 hour. It's still not done. Oh, it was done. Sorry. It was done. Duh. My mistake. It was done with today's price action and the gap fill. Other than that, we start getting, now the play is to watch above 246. Above 246, it could make a bullish run higher. What else? Meta has two gaps that could fill tomorrow. Thanks, Mike. For futures, would that be under Japanese yen? You can trade the futures if you want to trade it, or if you're looking on the CME, it's the 6J. You'll want to trade the mini contract though. It's the 6J. So if you look here under the futures, see it's the 6J. But you can trade the E mini Japanese yen futures, which is the J7 contract. I don't know how they came up with the naming. The J7s are a contract you should look at if you're looking to trade that on the future side. Meta. Yeah, Meta closed above the key resistance. I would definitely be focusing on this little mini breakout play with Meta. With Meta, you got the gap fill to 129.82, and then you have a second gap fill to 137.51. That's just a short-term break. You see breaking up and closing above the key resistance level. So even if we get some weakness and it pulls back to 120, it does not invalidate. Now, if we get below about 116, watch out because you'll get it going the other way. Because then you'll break the midpoint of this horizontal channel and we'll probably get a shake and bake pattern. But right now, it's a breakout with the focus on the gaps higher. So that's where we sit right now. There's still some mega caps in that are trading below key resistance. Longer term, yes, you still have the potential double on Google. I know I'll had this question. This is technically a very sloppy but not triggered double. It's a confirmed but not triggered. So if you're looking for, if this does finally turn around, you get a little play, I'd be watching for a pop back in Google to about 92.71. Potentially. It's not triggered yet, though. And at this point, if we do get follow through, it might have to be done on an intraday basis. With that, I'm going to wrap it up for now. We can look at some other things over the next couple days. Just keeping an eye. NVIDIA is still holding up. The key line in the sand for me is 138.04. If we do get a market rally on, though, I am watching for a potential pop back to about 158 in NVIDIA. With that, now I will wrap it up and talk to everyone tomorrow. See you at 8 a.m. Remember, we got key numbers coming out at 9. Miners, red book, but the key numbers are coming out at 9. And then you have FOMC minutes tomorrow. So, and the volatility traditionally does not die. It's not as bad tomorrow as today, but tomorrow is traditionally another volatile day. So don't get caught off guard. Thank you, Connor. Thank you, Charles. Thank you, Amit. And I shall talk to everyone tomorrow. Bye for now.